That's the main reason the markets are still heading up. So until we get that news, when I talk about do not front run, I mentioned that in the notes pre-market. Do not front run the event. A lot of traders try to get cute. They front run the process, right? Should not be a question mark. Do not front run. In other words, don't get out in front of as if you're going to get a better place in line. You're going to get steamrolled. The process in capital T, capital P. All right, do not front run the process because the move higher is the setup. Right, what we're seeing right now is the setup for the longer term trade. All right, that longer term trade that we want, which is the daily time frame short on the S&P, NASDAQ, Russell, Dow, right? As we get closer and closer to the 13 EMA propulsion dot. That is that moving average replacement that we use in this room, that smart, self-correcting moving average. As we climb higher, we'll start shifting our focus to the daily. So in the meanwhile, we're gonna keep our focus on the 1 minute. We're gonna day trade, right? Let me get these notes out to y'all. And just bear with me. Okay. So I just sent the notes out, and they're sent out as an alert. So they're in the alert section of the chat room, which is just above the general chat section. They should be sitting on your Simpler Trading mobile app as a link right now. Okay, and I'll send it through the general chat as well. Okay. All right, so here we go. 3 more minutes before the bell rings. So a couple of things we want to have established before the bell rings. By the way, in the room drive, which is the folder icon in the top up here, right-hand corner, see right there, a little folder. Open that up and you will see a document called VWAP Max Trio Notes on Settings. These are notes that I had for myself when I was teaching the submarket sonar class back in April of 19. And it will give you a little insight into where to anchor the 3 tools, a little insight into what they're measuring, why I use them. It's just a one sheet notes that I'd use for the class, okay? Also in the room drive, before the bell rings here again, also in the room drive is, let's see, I can't take a snapshot of this room drive thing. So you can see the, you can see it here. One moment. Okay, here we go. So inside the room drive, when you open it up, you'll see all the files. And some of the files that I would recommend you guys grabbing would be, right now, the ABCD macro cycle. That is a one-page document that explains the way in which we measure what type of macroeconomic stage, ABCD, that we are in, how we measure that, what I look at to measure that macro. So check that out. It's very applicable right now, gang. It's been applicable since Q3 of 2018, and I want you guys to understand, if you can get a better grip of that macro cycle, you've got a good idea of why I think dollar is a buy, gold would be bullish, treasuries, etc. Okay. And then I talk about 7 things that happen before a stock market downturn. I guess I could have 8 pandemics, but no, in all reality, 7 things. And then see this right here, the VWAP Max Trio notes. That'll give you a good idea of what we're measuring. So whether you do have the tool or you don't, I think it's going to be super helpful. Okay, so why are we relying on volume the way we are? We are not always going to see relevant price levels visible on a chart. Relevant meaning that price level that I may want to buy or sell at may not be out there in a traditional sense as a trend line or as a horizontal support and resistance level. Sometimes the relevance for price comes only after volume engages at that level. And they're not always going to be obvious. That's why we call them sub-market. They're sub-market trends. They're just below the surface. Right? That's why a lot of traders miss them, because you can't measure them with price. You have to measure them with participation. Participation, not price. So when we look at those levels as the bell has rung to kick off our day, 2 things. 1, and let's keep it really simple. It's really 2 things today. 1, yen is weak. It's not just weak against the US dollar. Clearly it is, but it's not just weak against the US dollar. It's weak against everything. And there's a couple different ways you can measure that yen weakness. And I'm trying to find my volatility window. Where is it? Huh. Did I lose my little volatility window? So I have this, I think TradeStation calls it a radar screen that allows you to compare, I can look at all the different relationships back to the yen. The yen is losing ground against all of them. That is very bullish for the equities markets. What else is bullish for the equity markets? Well, the who wants to be a trillionaire game. So as we move lower on the open, if we get the opportunity to see movement lower, the first level that I'm going to be looking for support is going to be approximately our -1 reading of the V-score, which says from a standard deviations, how far have we kind of wandered away from the mean, which is the middle line, the white line. Volume, it tells me that as we get down to this level, the volume should pick up and support should kick in. Now, what else do I know about the S&P, different levels to keep an eye on? 2,500, clearly is something we want to keep an eye on. 2,500 or 2498 was, I believe, the overnight high. I don't know if it's 2498 even, but basically 2498, 2,500, that's your resistance. That's your overnight high. Overnight meaning before 9:30 and after 4 p.m. Eastern. So after 4 p.m., but before 9:30, that's all your overnight stuff. Other levels that we're going to keep an eye on in this area are 2440, which I believe was our regular trading hour high to keep an eye on. So the market participants in futures, by the way, gang, some people look at more 24-hour charts. I like to do that because that way we can trade the Asian session and the early morning pre-9:30 session. But there's a lot of traders that keep their charts on essentially 9:30 to 4:15. So that's their reality, or what's known as RTH, regular trading hours. And that's at 9:30 to 4:15. Well, 2441, 2440, that's a level that they would be watching. Okay, that's a level they would be watching. It's not really a super important level, quite frankly, to me, though. All right, I think that 2498, 2500 is going to be hugely important. And we want some kind of pullback this morning to a -1 or even a -2 V-score. And if and when we get there, we'll talk a whole heck of a lot about it, because that's somewhere that I'd like to look to get long on the ES. All right. Okay, moving on then to the NQ. And by the way, do I still want to be trading ES and NQ in the same direction? Okay, almost always, because of the heavy technical stock weighting in both the ES and NQ. All right, buy only. Yen sets the tone. What else helps us set the tone with direction aside from the yen? What else helps us? Are we above or below key levels like our VWAPs? That's still a little mixed right now. Are we printing mostly grab candles that are green? I'd say that's pretty convincing. Yes, there are small pockets of red, but for the most part, we're printing predominantly green grab candles. We're plotting mostly above the 34 EMA wave, right? So that's bullish. And again, overarching everything, we're waiting for a $2 trillion stimulus plan, and we're waiting to get confirmation of it being passed. And we're seeing a lot of yen weakness. I mean, that really right now is enough. Okay. So on the NQ, interestingly enough, well, it's going to be basically a -1, -2 V-score bounce that I'd like to see. Now, for those of you that are wondering, okay, Rog, as it moves higher, what can I do? I will not buy into higher highs. I will not buy into higher highs. That's more momentum trading or scalping. Not that there's anything wrong with that, but that's not the way that I play. Okay. If there's anything to be done, it's looking, and if you want to do anything this quick, the market's been open for a grand total of 5 minutes, gang. Yesterday, we had 4 different opportunities in both the NQ and the ES to see the V-score bounce off a certain key level. The first one is the confirmation. The second, third, and the fourth are viable trades. So remember, the market's been open for 5 minutes. Don't feel like, well, I'll never get a setup. Okay. Let the market do what it will for a few minutes, and then we might get new levels of support that we're willing to engage the market at. It might be the 7 a.m. volume weighted average price. It might be the 9:30 a.m. volume weighted average price. And, it could be a lot of things, but we've been open for a grand total of 5.5, 6 minutes. Okay. So for now, though, make a note that -1 reading could be very interesting if the market moves lower. Okay. So we have readings on the ES, we have readings on the NQ. Now, just to jog everyone's memory, our trade setups yesterday for the ES and NQ looked like that first one up here. And I know that might seem like another language until we realize that a lot of times that when we're measuring a market, especially a market like this one, participation, volume, big money, if you will, size, all those things that we talk about sort of in a general sense, we can measure that. It's measured by the V-score, participation, volume, size. What price level, not what time of day, but specifically what price level was interesting to a large group of participants. So that is measured by the V-score. That's that sub-market. That's that X-ray vision, if you will. And so that's what we did all day yesterday. We had a reading on the V-score of 0 and a reading of the V-score of 0.55. And we basically revisited that a number of times throughout the day. Again, very similar in terms of the sentiment, bullish bias, longs only. I am not looking for shorts here, gang. Not until after we get the news, and that will be most likely on the daily time frame. And we're waiting on the deal to be signed. I don't want to be caught short when we hear somebody call for a press conference or a soundbite or somebody in the know says the deal's done. We were told all day yesterday that the deal was on the 5-yard line, then it was on the 2-yard line. Yeah, I don't know. Lots of football metaphors yesterday, which suited me just fine. But I don't know. I don't even know how many downs they're giving themselves. But suppose we were on the 2-yard line yesterday. All right. Okay. So I want to, again, focus on the long side and wait for my pitch. Wait for my pitch. Okay. All right. So moving on. Is yen weakness more likely if BOJ continues to buy Japanese debt? A Bank of Japan, Bexley Heath, you know this, and I'm not telling you anything you don't know. Bank of Japan Bank of Japan is a look in the mirror. That's where we're heading. A central bank that buys everything to keep an economy afloat with basically near zero rate. So if the idea that the Bank of Japan can prevent the yen from strengthening, we know is not true. They intervene from time to time, and that intervention only lasts usually less than 48 hours. They've been doing this for decades at this point, right? So is the yen short? And that's an interesting question. I think longer term, and that's a really big picture play, Bexley Heath, can we talk about whether dollar yen, it's not necessarily going to pertain to our day trades, gang. But the question then becomes, based on the central banks, could we see 200 on the, on the dollar yen? We're going to start to hear crazy numbers like that. Are you already hearing them, Bexley Heath? Dollar yen could go to 200. So I think everything's going to lose ground against the US dollar. Everything. But I think the conversation about the dollar yen